Welcome to episode 34 of the Bearish podcast, where we dog on cryptocurrency.
We said we'd spend exactly 30 seconds on it. Haven't looked at it for a couple weeks now. Just checked in on it about 5 seconds ago. And it's like that crash never actually happened. It's right back where we started. And Jared, my friend, he's not too proud about it. He doesn't like it. He doesn't like it.
No, I don't.
Let's hear it.
I deleted Coinbase. I've unfollowed multiple people on social media.
That's too much.
It's just so annoying. Sorry, ZipRecruiter just emailed me. Shut up. It's so annoying. FaZe Banks, love the guy, great guy. All he posts about are NFTs. I'm like, dude. And they get triggered. I always scroll through the comments, and it's always these guys are like, they just take a screenshot of the NFT. They're like, oh look, I have it too.
Wait, what? How can you time out? We've talked about this before, but how can you not just do that? I know it's blockchain and yada yada yada.
You don't own it.
You still have a screenshot of it. It's the same damn thing.
Get out of here. Yeah, and that's all Gary V posts about too, and I love that dude. And I'm like, Gary,
don't tell me you unfollowed.
I didn't unfollow Gary V.
You don't?
It would take I do follow Gary V. I did not unfollow him. No, it would take a lot of NFTs for me to consider unfollowing Gary V.
Well, it's literally only been NFTs. It's been Gary V and friends. That's what it is. I don't know. They are very. I can't believe FaZe Banks is still tweeting about it and stuff like that, because that whole scandal, I thought it wiped him off the face of the planet. But people
no. He wasn't in the scandal. It was just FaZe. It was just his employees.
I thought it was him though.
No, it was. Remember, it was Kay, Jarvis, Tico, and Nikan.
So he had nothing to do with it.
No Banks. Banks was straight.
But like, seems a little bit iffy.
These crypto people, they take it so seriously. Like, if you say one bad thing about it, they just ruin your entire day. It's like it's their livelihood. I don't
ignorant
understand.
To the future is what
you don't understand it, bro. If you take a screenshot, you don't own it, bro. You own it through the blockchain. Like, get that.
Whatever. Get the fuck out of here.
Whatever,
thing, bro. I don't understand it, but I support crypto more than I support NFTs. NFTs, I can't really. It's like, I mean, I guess it's like owning a Pokemon card or like a basketball card. Like, yeah, it's cool, but we've said it before.
People are dropping millions of dollars on it, though.
Yeah,
Of a pixelated CryptoPunk. Some
of them move. It's pretty cool. You know,
millions
of
dollars.
Them are animated.
And Banks tweeted. Banks was like, he was like, some people started from nothing and now they're millionaires flipping this stuff. and like someone in the comment section was like, yeah, starting from nothing. What, you have like $200K in the bank to be able to afford one, like right off the rip?
That is true.
And he's like, I've been studying the market for 7 months. Like, what are you studying? Like, these things, you don't know if they're gonna go up in value. Like, you buy it and you just hope, right? Am I wrong?
It sounds oddly like eBay and stuff to me, but with eBay, I mean, if you think about it, look, we bought VCRs that are from the freaking 1700s, and people are buying those for like $70. So it's like somewhere, someone out there is actually enjoying these stuff, and they're like, it's like when I was researching dropshipping, the guy was like, do furniture because there's not really a price on furniture. Think about it. If you buy like a lamp, what makes a lamp? Like, you could buy a $20 lamp, but it could be the same exact looking one, but it could be like $100 one, or even like a couch. It's like, how much do you really know to pay for that stuff? And I think it's the same thing for the NFTs. It's kind of like there's not exactly a price tag on it, but it's almost like somebody really wants that lamp or really likes the color of it or really likes the couch, you know, and they'll willing to spend $1 million on it, I guess.
Yeah. I mean, I guess the consumers are the ones that really set the market for them, I guess you could say. The ones that are buying the NFTs are the ones that say, okay, this is what I'm willing to pay. So that's the market price. That's the value of it.
There's probably something behind it that makes it like, since we don't really know, like, enough about it, there's probably like, oh, this one has this kind of, or only this many owners, or some behind the scenes that people are like, oh yeah, that's the one that I'll pay $1 million for, you know?
Dude, I just think it's such a rich person niche, like
There's rich people out there, man. That's what it is. That's what it's about.
Logan Paul tweeted he got a bid on one of his CryptoPunks. My dog is chewing the hardwood floor right now.
No, Frankie.
Hold on. I don't even know how to I'm not going to show it. He's chewing the hardwood floor. Okay, he stopped. Logan Paul tweeted that one of his CryptoPunks got a bid for like $400,000.
Okay, now with that's because it's a famous person. Like with the Gary Vee, it's because it's famous. But Gary Vee did it kind of smart. He there's something behind the NFT, you know? It's like, I own this and I get like an experience out of it, which that in itself is genius. It's just paying a lot of money for an experience. It's almost like a giveaway, like a sweepstakes type thing. But like these Logan Paul ones, that's the only one, or like any other big guy who has an NFT, is kind of just like, oh, there's a big guy that owns an NFT and I want to own it straight from Logan Paul.
Yeah.
That's what it sounds like.
Yeah, I mean, but like he tweeted, it was a CryptoPunk, and it was a guy with purple shades and a hoodie on. And he said he got a bid for like $400,000 on it. Banks replied right under the tweet. He was like, bro, don't sell it. This one's going crazy. And then right after that, Logan Paul tweeted again. He was like, yeah, it's got another bid for $700,000 on it. And I'm like,
could you imagine? What? That's literally taking like $0 and putting it into 700,000. Like, he didn't do any. How do you even create one of those? It's like you go on like the Apple pixel art thingy and you just start drawing a picture and that's what people like because they're literally pixelated. Like, it's not even like it's like a
high quality image.
Ones I've seen, they're not even like a high definition anything. It's just a pixelated whatever it is, you know.
Is there a shower in the background?
Yeah, I think Logan just turned on the shower.
Fantastic. For people that are listening, Logan just didn't reply to our messages, so he's taking a shower. He's making a feature in the shower.
So he's taking a shower.
Okay. Oh yeah, the Tom episode, investing with Tom.
Yeah. Okay. You're gonna love this.
Okay. I can't wait.
Okay. He said something that really stuck with me, and I think I said this to you before, but he was like, if I'm gonna put a substantial amount of my assets into something, I want to be damn near 100%, because you can't be with anything, because he said it himself. He was like, there's gonna be things that pop up that it's like, well, who could have guessed that? You know, Robinhood shutting down trading was even though we were investing in dog shit, Robinhood did shut down the trading, and that was a thing out of left field, you know.
Dude, we were so mad too. We were like, bro, what the fuck?
That was my money right there.
We're like sitting in AMC and Nokia and shit like that.
I know, we should have known. Like, we can't even get mad. It's like bankrupt company. When was the last time you seen a BlackBerry? The only good thing BlackBerry had was the Brick Breaker game that you could play on it. That was awesome.
Fuck.
And Bed Bath & Beyond. What a place. Speaking of another store that should be closing down, in my opinion, Mattress Firms. I did work there the other day, and I was in 5 different stores, and the amount of I saw literally 3 customers, and they were in the first store only, and every single other store, all the rest of the 4 stores, there wasn't literally every single one. I was trying to make conversation with the manager. I was like, oh, like, slow day. He was like, yeah, this is pretty normal, actually. Like, the last store I was in, it was just the manager sitting in the middle of the store, eating Five Guys, watching Netflix, like, full blast, like, on her computer. And I was like, wow, this is really it. And I literally said the same thing. I was like, is this normal? And they were like, yeah, like, we don't really get many people coming in here. And I was like, short that shit, because are they like trading, like, literally out of the whole, I worked 12 hours that day, and out of the whole day I was like, you know what, I'm shorting Mattress Firm, because
Mattress Firm, let's real time look up of is Mattress Firm a stock? Is Mattress Firm on the stock market? No. No, it was bought out. It was bought out by a company, so they are no longer a publicly traded company. Thank God, because
it would have been a straight red line down for like years because there was nobody in there. But that's just besides the point. Anyway, back to Tommy Boy. He was saying you want to be like, you know, basically 99% sure, and it's like,
yeah,
why not
feel comfortable?
Yeah, and if you do this research, you literally and make a good judgment based on the findings, you actually don't really have anything to worry about. Like, you just don't. I think at that point, if the stock, you have the margin of safety of what, anywhere from 30 to 50%, even upwards of 60, it's like, what do you have to worry? Like,
a great company, you can even be like, for example, if Apple went on sale, I'd buy it at 10%, 20% margin of safety.
Right.
It's just a little cushion.
Yeah, and it's like, and then this is another thing that I learned. I learned this also from In the Money, that YouTube guy. At first, when I started investing, I would be like, oh, I want to be in this position right now. And so I'd put everything that I was willing to put into the position right off the bat, you know? And it's like, if there is some downside to it, I don't have any money left I don't have any capital left to average down, you know? I don't have any money left to lower my buy-in price, so the break even is lower. And I think that was a big mistake that I made when I first started investing. And even I found myself doing it. Well, I haven't bought something for a couple months, but I found myself doing it with that. Like, I just would go like all in, and then I was like, wait, I don't have any kind of protection against myself. And now a major part of my portfolio is in this investment. So it's like, kind of be careful with that. But back to Tom again. It was like, it makes sense to really research the company, and you don't have anything. You don't even have to look at it at that point. Like, you're fairly confident unless some big headline comes out on the news of this company is shutting down. That's really the only risk that you got, you know? Like, of course there's risk to investing, but let's be honest, right. That's really the only thing right there. I thought it was pretty interesting.
Yeah, Tom is a big fan of Mohnish Pabrai, and in his book Dime Investor, all he talks about, he says investing is betting, but you want your bet to have the odds to be so heavily in your favor that it's like a free lottery ticket almost. Like, it's like this thing is not going down much more than I just bought it at. Like, I know, like, for example, I've been digging into Alibaba. I've actually started a position in Alibaba.
Sound the alarms. It's the first time.
I know. But yeah, I dig. It's not easy to dig into a company. It's extremely hard. Like Alibaba, it's like Alibaba itself is a group, and then they have all these businesses. They have, I'm just gonna rattle them off. You're gonna have no clue. They have Taobao, they have Tmall, they have Lazada, they have Ant Financial, which has Alipay, AliExpress. I mean, LMA, or I think I'm pronouncing that right. So many things, and it's just insane how big of a company they are, and I wouldn't have felt comfortable just putting money into Alibaba, because if I would have like heard about, say Ant Financial had a problem, they were like, Ant Financial has to do this, and I didn't know about Ant Financial. I didn't know Alibaba had a 1/3 stake in them. I would have been like, wait, what the fuck? And then you have like, you're just completely, the odds are like not in your favor anymore because you have no clue what the hell that is. So you could panic sell. You could just do a lot of things that would be hurtful to your portfolio and essentially your money. So yeah, like you said, it's really important, and Tom was really big on that. It's really important to know what the fuck you're investing in, because it's your money, dude. Like, you're just not going to throw your money at something where you have no clue what it's going to do or what it is even.
I've heard a lot of big time investors say, to be honest, investing is boring, because what you do, you research, and then you put it in, and you really don't have to look at it. It's like, because you've made a decision, you've done your due diligence, and at that point is you just kind of let it ride. And if you're confident and you're correct in your, not exactly guess, but gamble, bet, and you've done your research, then you don't really have much to worry about, and you kind of just let it go. and that's where the investing becomes kind of boring,
calculated,
quote unquote. Yeah,
yeah, and it's
because you know it's going to happen almost. They're like, okay, well, you kind of know the outcome.
Yeah, there's a very good chance. I'm going to say this with Alibaba. There's a very good chance China continues to grow at a rapid pace, way higher, and they will overtake the U.S. economy as the greatest economy in the world. It's going to happen. And Alibaba is like China's like golden gem. Like that's theirs. You know what I mean? So if China continues to grow, Alibaba's it's going to continue to grow, and they're just not e-commerce. They have cloud. They have these innovative things. They have financial services. They're invested all across the globe. Like they have a what is it called? I don't remember what it's called, but they have a leading e-commerce platform in Turkey. They have a leading e-commerce platform in Southeast Asia. You know, in Singapore and places like that. And it's just like this company has been beat down over the past year or so on short-term news. The Chinese government is they're kind of beating up tech stocks for whatever reason. It's like for Alibaba, it's they're concerned about like security reasons because they don't want like the U.S. to, you know, get a hold of any data that would harm China in their eyes. Like the U.S. can't have this data, or they could harm us, or it wouldn't be like beneficial for them to have this data because, you know, the China-U.S. relations aren't very good, and it's just and people are worried about delistings. But Chinese companies getting delisted from the U.S. stock market because Chinese companies don't let U.S. auditors audit their financial reports or their accounting records or whatever. But China and the U.S. need each other. Like they're not gonna not have relations. That would be terrible for both countries.
You look at half our stuff. It says made in China. Like,
exactly.
To be completely honest.
If the U.S. and China were to completely break off ties, that would cripple both economies. Okay.
And probably other ones as well, because there wouldn't be as much revenue coming into each country.
And think about this, just like super basic. If the U.S. delisted Chinese companies, do you think the U.S. market would react like kindly to that?
I would say no.
Absolutely not. There would be a massive sell-off.
Because a lot of people have stakes in that. So it'd be like, well, what are you doing, like taking my money, you know?
Yeah, that would cause a massive tailwind in the wrong direction, and it would be terrible. It would cause a major event. It would be awful. And also, to add on to that point, even if Alibaba, for example, got delisted, which it won't. If they got delisted, you could just convert your shares to the Hong Kong shares on their stock market. So it's literally not a big deal.
Well, to wrap that up, I remember when you first talked about value investing and you were like, yeah, these companies are going on sale by 50, 60%. And I was like, my first thought was, well, if they're going on sale by 50, 60%, there's obviously something wrong in the pipeline and the mechanics of the company itself. Like a company just doesn't go on sale by 50% and it not be doing something wrong, you know? But at the same time, markets, I learned this in class because the teacher was talking about it. Markets aren't rational, you know?
Rational. They're not.
Yeah, they're not rational. And what that means is there's a lot of people. Think about this past year when a lot of people got into it. You didn't know who was doing the research, who wasn't doing the research, and you would see Dickhead 42 on Discord saying, you know, I'm going all in on this because I know this. I mean, he could be bullshitting it, you know? There's people making irrational decisions all the time. There's people doing their research, there's people not doing their research, there's people over-investing, there's people not investing enough, or maybe read some kind of false information. And so this all is taken into account when the stock is dropping of short-term news that may not be, or short-term reactions that may not be 100% correct. And I think that's another thing that I learned from you and Tom and just kind of listening is these things get misvalued at times. And it's not because of the fundamentals of the company. It's because like I just said, the markets are irrational. You know, people act in different ways that they don't have all the information, or they are acting on information that isn't correct. So it's completely possible to get misvalued and then buy it, and then it returns back to its value.
Boys and girls, Max has turned to the fucking long-term gang. I love it, dude.
It makes sense. Like, it does.
And like you're exactly right. Markets are driven by human emotion, and humans are the most irrational thing.
Right. There's emotion in investing, and you could see one piece of information and think, oh, I'm taking all of my money out, or I'm putting all of my money in, and it's an emotional driven decision, you know, and that's it's totally neglecting all the facts of the company or the fundamentals.
For example, nothing with Alibaba, their business fundamentally has changed. Nothing. There has been nothing
it's emotion driven.
Other than they had to pay a fine for anti-monopoly violations, but in 10 years it's not even gonna be on their books. Like their cash that they have over $40 billion in cash, and their fine was like $2 billion. It's nothing. And no, it's not. And like you said, emotion drives the market. And the cool thing about value investors, and I don't really like that term, because at the end of the day, investing as a whole, you just want to buy something for less than it's worth. Like that's investing in general.
Yeah, right.
Like if you're going to buy a rental property, you're not going to buy it at what you're going to get out of it in 10 years. You're going to buy it at a substantial discount, hopefully, if you're smart. I mean, it just makes sense. It just makes sense to want to buy a business that you understand at a price that will yield you a very high rate of return. It just makes sense.
It literally is. It's when you step back and look at it, it's like, well, no shit, you know. It's like that. I guess I wasn't against it from the start. Like I always saw it, but I was in my phase of I really started getting into it when it was like AMC, GME, and it's like, fuck it, let's just throw money around and have a good ass time.
I know.
It
made it seem like that was normal, like it was always gonna happen.
Yeah, and I come from, I like thrill, you know, and I like having a good time.
You like gambling. You like gambling.
And I got caught up in that. But it's like, you know, when you're really putting a lot of money in something you don't know about, you sit on edge. You really do. You're like, oh fuck, you're always just looking at it. Yeah, your screen time on your phone explodes by 5,000% because you're just staring at Robinhood. Freak out when it goes up or down in a single day.
Just doesn't sound fun. Just does not sound fun.
I mean, kind of. When it goes your way, it's really fun. But other than that,
yeah.
I guess my new strategy is gonna be.
Hold on. Let's hear it. Drum roll.
My new strategy is gonna be one of two things. I want to learn how to value companies. I want to learn that.
We should do that next episode. That should be the next episode.
Yeah, that's fine. I want to learn that. 2, the easy route. Watch what Phil Towns, Manesh, I don't even know how to say his name.
Mohnish Pabrai.
That guy, Warren Buffett. You just watch what they do, man. They're
what that's
throwing
called, Max?
Billions of dollars. Yeah, it's called something. It's a strategy.
It's called shameless cloning.
Yeah, and why they do the research? All I gotta do, alert that Warren Buffett just went all in on blah 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 company. Okay, my money's there.
Yeah,
because they're not gonna throw around billions.
If you were to clone Warren Buffett, your average rate of return would be well over 20%, and you would be a very, very rich man. Just by looking at what he bought. Yeah, even if you can see what they bought. This will be like a little learning thing. You can see what the big guys buy in their 13F filings, which is their quarterly reports, what their portfolio has, what they've bought, what they've sold, what they've done nothing to, what they have. So yeah, you can see that it is. I think it's it might be a month late. It might be like a month after they've made those positions, or 3 months. I don't know, but most things don't explode in a month. It takes a while, especially what these guys are buying. Like, I mean, Alibaba's been going
slowly, you know.
Yeah, Yeah, because they have to tranche their way in because they have so much money. Alibaba's been going down since last October. I mean, you could have saw Charlie Munger buy this whenever a few months ago, and you'd actually buy it at a lower price than he bought it at. So So shameless cloning. And Max, what is your second one?
That was it.
Doing
my own research. Doing my own research. Because I do want to learn.
And this Max is referring to, I think the valuing is discounted cash flows, Max.
Yeah, exactly. Discounted cash flows.
We'll do that next episode.
I know somewhat from class, but not exactly on stocks. Long story short, it's finding out what an asset is valued at now with like future.
The time value of money, pretty much.
Yeah, and it's you're discounting it to today's price, basically. What it's worth right now. Yeah.
Very, very vaguely, because this episode will be, we'll do it next episode. Very vaguely, you are estimating how much cash this company will produce into the future and discounting it back to present day. And you can do that either with your rate of return that you want or the company's weighted average cost of capital, which is incredibly confusing. But
and discounting means like working backwards, like you're going in the past basically to find out, like you're starting in 2020 whatever, like 5, and then bringing it back to 2021. That's a next episode, and that's a perfect segue.
That is the next episode. And then you get into the time value of money, and that'll be good. Time value of money is actually
really interesting. All right, follow us on YouTube Shorts, all of our social medias, Instagram, screw Twitter, Discord. We're on Apple Podcast. No. Okay, no Discord. We're on Apple Podcast, TikTok, Spotify. Am I missing anything? I think that was it.
No, that's good. That's good. Man.
Everything is Bearish Podcast, pretty much, or Bearish Pod, I think, on TikTok.
Yeah, just go into our go on our Instagram, click the link tree. It'll take you everywhere.
You'll find what you need.
All right, that's episode 34. Appreciate you guys listening. Peace.
See ya.